Okay, we are live. Thank you very much, gentlemen, ladies and gentlemen. We are very much. Let's have a look at the calendar. Listen, I am not awake. I just a bit of a rough night's sleep, so I am definitely not 100% awake just yet. So there, my disclaimer is going to be: take everything I say with a pinch of salt today. Let's see. Okay, so yeah, okay. Now, I think there will be. Excuse me. I think there will be some. There will be some volatility around the news, the US news today. I think there's going to be some volatility around that. So I would expect 130. There will be some choppiness and some swishing around. And the reason why is I don't think that the numbers are going to reflect some of the positive changes that have been implemented until next month. And so therefore until a later date. And therefore today will potentially not be great. Okay, so there's always those fears of inflation being stoked. I'm really not there. Okay. So, in a situation like this where I'm not 100% awake, I'm not going to pressure myself to trade unless I feel very confident about everything I see. Okay, so I've got the list from yesterday. We'll see how they went as, kind of based on our expectations. But let's go through the markets now and let's start fresh. And let's do that. Let's do this. Okay, so euro dollar is actually looking relatively bearish. All right, so this, we didn't get this break above, we didn't get this break, we are streaming, we are, okay, cool. We didn't get this break above these highs yesterday, so we didn't get a move to the upside. It didn't happen, it was actually here. Looking for that 4 hour to kind of bounce off there, it didn't actually happen. Now we have a potential lower high on that 4 hourly. Let's just see if we've broken the low. No, we haven't. So we'll have to see how that finishes. It's got 24 minutes, but that is looking like it might potentially want to head low. It is a bit range bound in its behavior here. So it could find its way heading down today to 1.1232, for example. Could be the case. Again, I would say there isn't a clear trend at this time. So even here, for example, you went up, produced a move down, and then broke out of that. Same thing, we could do a bit of a break or a move or something like that. We might find that the US news kicks it off, and by the end of the day, we close to the upside. We close a little higher. Oh, I'm so sorry. That's really super not attractive. Hi, Richard. Hi. Good morning. Good morning. So just very cautious with this because of that kind of what that news is looking to do. Okay. Whereas sterling is looking a little bit more bullish, just that little bit more. Look at that daily finish. Looking a little bit more as though, let's go to 75 units and just looking as though it might be rejecting those lows. And there we go. There's that level. So I'm looking to see if we can crawl a little bit higher today on that, but no trades just yet. Aussie dollar, US dollar, this is what we were looking for yesterday. It was a break up here and a retest and a bullish move, which didn't happen. It actually rejected that level and subsequently headed low and then sideways. So that setup didn't happen. So today, consolidation, I would be looking ideally for a break to the upside. So on these, I'm looking for moves to the upside, but there's nothing here that's super, super attractive. Potentially just moving this down to here could be something that might happen. So I'll be looking for sort of more moves up. Something along these lines. There we go. Why did that happen? Okay, possibly that. Okay, which is actually the case over here, is the potential there for a move higher off that up to there. Okay, move up, pull back, bullish candle, break up to the upside, heading up to 72. Okay, so that is, that's what that is. Okay, just gonna move that over here. Okay, which is just lying right on top of that. It's okay. And so that's what I'll be looking for there. Any kind of a move here, high, low, high, high. So let's grab that. put that in. See what I mean? There's the not quite awake. Okay, let's go back to the charts. Kiwi dollar. Strong rejection here, so also did not break through on those levels up here. Did not do that. So it would be the same kind of thing. It actually looks way more bearish. Looks way more bearish than bullish. Let's just get rid of that. Let's get rid of that. This is looking more bearish, as are a few of these other charts as well. They're actually looking like a break and a retest. So let's do that. Break and a retest, possibly. And meaning that, so we might get something like this. Just some exercise, exercising some caution here. I'm going to put it in the notepad. G appears bearish. Sure, appears bearish. And I'm just going to put here as well. Trends could shift around on the majors today, so just exercising some caution. Either don't trade. All right, so either I won't trade. For regulation purposes, it's actually important that I say that I don't give you financial advice. I mean, I know you guys don't know that. I know you guys know that, but I have to do it anyway. So either won't trade, comma, or reduce risk. And actually say either won't trade if not confident. And actually, while I'm at that, I should add in the disclaimer into this. So, all right, let's go into this stuff as well. So just cool. It looks bearish, man. And actually, maybe that's all it has to be. It only has to be bearish for a small period of time. This is saving into the same document. No, it's not. It's saving into the 10th of December, into that, which I'll share the link with. What are you doing? What are you doing here? Come on. So then that document, let me get you the link for that. Dropbox, let's go in. Here's the link for today's document. It's obviously open in real time at the moment. Let us continue. Dollar yen. See, dollar yen looks more bullish now. It did come up. There was a move down. So, oh yes, I traded dollar yen. I actually shorted dollar yen here. This was a really good, let's talk about this. This was a really nice retest. It's really important when you retest that price goes away, comes back, that there's a gap, as opposed to one or two candles down, one or two candles up. It's not a proper retest. A retest is when it heads away and then decides, actually, no, I'm going to come back and test it. That was a good retest. That was a trade. So I took that yesterday, but I got out here. I did not get out here because it was waffling too much, and I had already hit 1-to-1 then I just moved the target closer, and then it actually moved down and hit it. But that was a valid trade setup. What it's looking like now, to me, is looking more bullish than bearish at this exact point in time, but I need to see that confirmation. So for me here, we've got a potential bit of a level of support. This could head a little bit higher. So I would say if there's a break below, I would be bearish. If there's a break above, I'd be more bullish. So that's going to be more like this. So here it would have to head away, then it would have to come back, and then I think I would prefer to trade it to the upside. Alternatively, it would have to do the kind of opposite. It would have to here. Oh wow, that really doesn't work well. Alternatively, let's try the pencil tool again. I would prefer for it to do this, up and down. No, that really doesn't work. Okay, I just wanted to draw a line. Alternatively, same idea. A break and a retest lower. So notice the conditions are not obvious. They are not clear at this point in time. It does look more bullish, but if it doesn't break out that range, it could head lower. Now it looks bullish to me. So that's really what I'm going to be looking at there. That's my plan for today. Hi Sven, hello. Right, USD JPY could go either way. Appears bullish, appears more bullish. Yeah. So presumably, you know what I mean when I say a break and a retest. You should, for the most part, beginners aside, most of you should be able to trade that, meaning you should be able to look for a nice bullish candle that settles on, settles on that level of support, and your entry above the high of it. If it's a nice rejection candle, and your stop loss below the low of it on the other side of that. You can move your stop loss a bit further away into the middle of the range if you want. I'm thinking today reduce risk. I'm not feeling it. That doesn't mean I won't call it right. It's just I'm not feeling it just yet. So whereas yesterday I was more like, yeah, I think these moves are going to happen. I'm just twitchy about it today. Okay. Dollar Swissy. See, dollar Swissy is range bound. There's the bottom of the range. There's the top of the range. It's done a higher low, but it's actually just, all it's really done is ping-ponged off the center of the range. And so again, a break above, break below. So maybe what will actually happen is price will stay within this range until the news comes out, and then, which is at 130, and then it'll just break out. So again, I think keeping that news in mind is also worth being cautious about. Very much on the majors. All the majors are twitchy. They're all over the place. I prefer them when there's a clear kind of trend in play. Dollar CAD. See, dollar CAD also looking more bullish than bearish. It's kind of come back here, produced a higher low. It looks like it's up at this area here, wants to head a little bit higher. So these all look more bullish than bearish. They're just, yeah. So in this case, we're going to have to see how that goes. There's definitely a level here, and this could battle. Some caution. Euro GBP. All right. There's actually, I think, a fair possibility Euro GBP is going to head higher. So today, I'm sort of a little bit more cautious in terms of these. I'm thinking that's a possibility. Back down at the old highs. Overall, the trend is more bullish. It is range bound, and therefore it could go lower. So it could be pinging back down, but I'm thinking it's going to at least attempt to head a little bit higher. So we'll see how that goes. But yeah, I'm going to grab that. So yesterday I went short dollar yen and short DAX. I'll check what other trades I took, but that was it. The DAX breakout actually went. I was quite impressed. I've only got 2 monitors. I used to have my laptop connected, so I had 3 monitors, but now I've got a desktop machine and a laptop, and so I've got the 2 monitors in use. And 2 monitors is generally enough. I would say maybe 3, but that's being spoiled. 1 monitor is actually sufficient, but when you're broadcasting to others, you want the broadcasting set up on one screen and you want your private accounts on another screen or whatever, or out the way. Desktop clutter is actually a thing. Okay, so this look at these rejections along the low here. This is, it really wants to climb higher, but it hasn't got there yet. There aren't enough buyers. I pretty much think that once we break above this high on the daily, we're going to see moves accelerate to the upside. But until that time, we could break through the lows. So this is range bound and therefore I think very highly risky. So I'm going to pass on this. I would need to see it go higher, but it's in the recording. So this now looks like it's trying to set up a bullish breakout pattern. Okay, move down, consolidation, potential breakout pattern. It could also break to the downside. It's really mixed messages today. For me, this is such a strong downtrend. It could want to break to the downside. But I'll tell you what I'm going to do. I think I'm going to say, look, bullish breakout pattern to the upside. And this might actually be a good trade because it'll hit, if it breaks through from here, it's going straight up to there. So that then means a relatively decent reward to risk setup. Look at the lack of liquidity over here. FTSE is not as liquid as it used to be. But yeah, I think we'd like to see that happen as a bullish breakout thing. So I'm going to call it. That's what I think that is going to be. From yesterday. Okay, good. You're a cat. Also could be bullish breakout. Also could be that higher low, slightly bullish candle, but this consolidation really right smack bang in the middle of the range. Could be a bullish breakout to the upside. Might be something there. So I'll tell you what, we'll do it on the 1 hour. If I am concerned about trading the breakouts, then a break and a retest is acceptable, but it's going to take a while. A break and a retest will be ready on Monday, probably, or end of day. It's not really worth it. So that could be the case. So what you could do, you could trade the breakouts on the 15 minutes and then hopefully you're done today. It's really important that if the whole reason I always push taking partial profits, getting to break even as quickly as possible is that you're at least you get to that 1-to-1, and then after that, if the winds change, excuse me, when the US comes online, you're not stressed about it. And although it sounds frustrating to take 10 trades and have 4 of those not make any money, they're break even, but they're not losses. Chances are they would have been losses if you hadn't taken partial profits. Alternatively, there's nothing wrong with you on the day going, you know what, I've got 4 trades that are up 1-to-1. I'm just going to close them all and just bank them. And I banked 4R on 4 open 1-to-1 trades. Perfectly acceptable. It shouldn't necessarily be a habit if that's not your strategy. But on a Friday, I think on a Friday, if you get to 2 or 3 o'clock or 4 o'clock and you have got profits banked on intraday trades, unless there's an exceptional reason where you think this baby has got lots of room to go, which can happen. If you haven't got that, bank it. Just close up shop. Just do it. And you won't regret it. On all those days where I've done that, I can't think of a single moment where I've ever regretted just closing up shop on a Friday. I can always pick it up again on Monday, and then Mondays usually have a funny behavior anyway. So, okay. So this could be a breakout. I'll map it on that 1 hour. This could be a breakout to the upside, which would then be a bit of a break and a retest, potentially. The only way that you'd get it is on that 15-minute today. Otherwise, it's next week, if that makes sense. And it could be a trade for next week. So, could be. Also, look, if quite a few of these break out to the upside, we would then have euro strength, which next week would be something we can milk if that is the case. If euro dollar does indeed break out, because it's been stuck down here for a while, it's going to probably, after consolidation like this, if it breaks out to the upside and it gets over 114, it's heading all the way up to 1.15 or up into these lows. So there should be some good tradable opportunities on that. Just noting that for next week. And that would mean dollar weakness, which means we'd also see GBP cable climb, Aussie dollar climb, Kiwi dollar climb. So there would be lots of trades potentially if that happens. And actually, if it happens later today, if we start seeing a climb this afternoon after the US news, then today is the day. I'm just saying a lot of the euro pairs are looking somewhat bullish, and therefore they could all be getting ready to break out to the upside, and there could be some bullishness on that. And then I look at this one. So this is interesting. I mean, there's just no, this is Euro Aussie, just no buyers above that. Strong bearishness. Then a false breakout yesterday, which we witnessed. Then an attempt to get up the other side, back in, consolidation and bearish, very bearish setups at the moment on that 4 hour. So this still looks like it might break out to the downside, but it is definitely still within the range. If anything, that range is expanded down lower. So super dodgy. I would rather, I'm going to frame this as a range at this time. And I would say get involved when it has definitely broken outside of that range. So have a look at that, but pass on it for now. Euro Kiwi stuck within a bit of a range. So Euro pairs, not surprising to see them range bound. Okay, Euro Kiwi. Thought that we might get a nice breakout below. We never did. Bounced right off that. So no breakouts and retest. So we can get rid of those. We can now see their range bound. They were potentially going to break out. They didn't. Pound yen. Just drifting. Range bound. Not great. So yesterday I was looking at some of those yen pairs to move lower. Some of them did. I only took dollar yen, strangely enough. Once I have, it's not on purpose. Once I have about 2 or 3 trades on and I have lots of other things to do, I tend to just go and get involved. So yesterday I had other stuff I had to do. I had a webinar I had to present for Fineco Bank, and I had a whole lot of other things. But my point is, so whereas if I'm just purely trading, I might keep an eye out for multiple trades. Okay, so this, interesting. So the daily is coming back again, back into that range. This is just very messy markets. I don't know how you guys and girls are feeling about that, but yeah, that's going to be the case. Nice consolidation here could lead to a breakout. Might very well, if you look here, we've actually changed trend. I think I spoke yesterday about possibly pound Aussie and a few of those shifting into a trend to the upside. This could be a breakout to the upside. So there could be, let's mark this. Okay, that could be, see that. Again, the best breakouts are the ones that go away a bit and then come back and then take off. Otherwise, it's a false breakout. So if it's just one candle, look, it depends. The MACD has to be really bullish. So here you can see the MACD kind of trending back down. I would want to see that MACD trending up already, trending up with price action. So that very iffy, but I'm going to put it down as a break and a retest and a buy if that happens. And it is, again, it's iffy. I would almost not read that document if you haven't watched the morning session because you don't have context. Again, laziness. I'm just waking up, man. Let's move these down a bit. So the older ones are still in there as a reference. This is Windows 11. Not always sure if it's, I like it. I'm a big fan. I've worked on every operating system on the planet, pretty much. Linux, everything. I don't really care either way. Okay, they're struggling to break above this. A break above 18525 pound Aussie is definitely more bullish than bearish, and there could be some shorter term moves. But what it has also done is broken up, come back in here. This is potentially a bearish signal. Okay, so let's just talk through this. We had it yesterday on one of the other ones. We had a breakout to that bearish candle closing lower. This is what you would need here. So this is a possible bearish setup actually. Let me explain why and how I might approach it. Again, I would want to see a 4-hour candle that closes, which isn't going to be for several more hours. So it would have to be in 4 hours time. I'd have to see, oh, we've literally just got one now. I'd have to see a bearish candle break out and close, which means I wouldn't be trading this until 12 o'clock anyway. And so then I'd be looking for continuations to the downside. So I'd have to see a bearish candle. I'd have to see whatever this is become something like that. And again, there's a bit of a level here. Okay, I'm just highlighting there could be a possible move lower. We'll see. Okay, but I'm not going to put anything in there necessarily. This one looks a little bit more bullish. Wow. Sorry, guys. Either I'm missing something. Either I have my touches off today, or the markets are giving very much kind of mixed signals. I think it's one of those where you'll look back in a few hours and go, oh, that was obvious. How did I miss that? Here, because I'm just noting here that strong resistance. We still haven't actually broken out. This doesn't qualify as a breakout because it didn't close solidly above that particular level. So again, it does look more bullish than bearish to me. This is a potential breakout to the upside. I'm okay with that. So there could be something on Aussie Kiwi up to 1.06. So again, I'm going to mark this as a potential breakout. And then I would do... Look, the goal here is really to trade the 15-minute wherever possible. Unless you get a small candle on the 1 hour and all the setup and all the signals are there, then you can might as well just trade it on that. Sometimes trading the weekly chart will give you a small bullish candle with an entry and stop loss that's closer than anything you can find on the other time frames. You might as well just take it. Again, if you're ever in doubt, you always want to reduce your risk. It's really okay to do 0.25% to 0.5% per trade. So let me give you an example. So if I take partial profits at 1R, which is when I hit 1 to 1, and I have a target of 3R, 3 to 1, I usually find the net profit is 2R. So in other words, that means if I risk 1% after I take profit at 1 to 1 and I hit by 3 to 1, I've made 2 to 1. That's my net profit. So there we go. So net profit is 2 to 1 on my average trades. And then I have some break-even trades, and then I might have 1 or 2 losing trades out of every 10 trades. And so if I have 0.25% risked per trade, and I end up banking 0.5%, and I have 2 or 3 of those in a day, I can bank as much as anywhere from 0.5% to more than 1% in a day. And some days I have down days or flat days. If you've seen my stats, I post sometimes in my chat room. My stats are I can be down 0.2% for the day or something, or I can be break even. The point is by the end of the week I can be up 1% or 2% just from trading 0.25% and making 0.5%, but I'm just have a few more trades. And so by the end of the month I'm up anywhere from 2 to 8. And that's on 0.25% per trade, which is crazy. And actually, which is why if you are on fire and you are trading 1%, people can end up banking 15, 16% in a month. It is possible, but I would say your skills have to be bang on. And your risk management has to be bang on, because your losses have to be as little and as rare as possible. Okay, so I'm going to put Aussie Kiwi in as the first real potential trade setup that actually kind of somewhat looks decent, or looks semi-decent. How to identify high momentum stocks using MACD indicator combining with price action elements. Yes. What about it? That was my webinar for Finico Bank. Did you see that? Did you attend it? It'll probably get posted on Finico Bank's YouTube page at some point. It was pretty cool. I thought it was pretty good. It was just talking about using the MACD properly. That's all. You'll notice I don't use the MACD too often. I use it mainly for breakouts. Like here, for example, the MACD is dripping down a little bit, and here we're breaking up to new highs. So until you see that commitment, that solid candle breakouts and close outside of that in 4 hours time, it's going to be really tricky to potentially. And again, that's even more reason that if you do trade it here while the 4 hour candle is still going, you definitely want to make sure you get to break even or take some profit off the table if you can. Sorry guys, I'm going a bit slowly today. I apologize. Into D. It's also 15-minute potential breakout. Okay. Let's just call it B out. Potential breakout. Aussie CAD looks bullish. So Aussie so far, because they're overextended, they look a little bit more bullish than bearish. They've all got that move up, consolidation, creeping up a little bit higher. So it could be that Aussie Swissy. Okay, same thing again, slowing down, losing a bit of momentum. Might want to burst its way up to the next level. So some caution, but they look that little bit more likely to head a little bit higher. Here's a pullback, bullish candle. There's clearly a level of resistance up here. So I could always just wait till it gets past that. So all the Aussie pairs have actually retraced up and are sort of hovering around. Aussie Kiwi looks like it might climb a little bit higher. And then you have Kiwi CAD. So Kiwi CAD now looks more bearish. If this looks like it's pulling back in, potentially setting up as a bearish kind of breakout or move a little bit lower on the daily. So interesting to see that. That actually now looks like it wants to head lower. Kiwi Swissy. Guys, I would just take everything I say today with a pinch of salt. I'm just like, this is what I'm looking at. For example, here on Kiwi Swissy, that continued failure looks like a bearish setup. Meaning, unless we have a breakout candle right over that line, I remain bearish. And in fact, what would change my mind would be a bearish candle down here, which would be a big move like that, closing down like that. Then I would be looking for trades to the downside. That looks like it's going up and stalling. And then how do you know if it's finished stalling and it's now moving? You would get a bearish candle that would break out, probably close below these lows here, solid, and then it would usually start moving. So in other words, there's no sign of where it wants to go. And then you get that momentum candle, that is like, this is where we want to go. So that is then what you end up looking for if you get that. So hopefully that makes sense in the video, in the YouTube video that we're recording now. Okay, same thing. It's an inside bearish candle, so it's quite weak. It could just be getting ready to continue down. And so there could be some good trades on these to the downside. We will see. CAD Yen has done a swing high. It's a bit mixed. They really are giving very much mixed signals. This now looks like it might want to break up to the upside versus to the downside. So the way we would usually do it is say, okay, here's my range. If I'm above that, I'm bullish. If I'm below that, I'm bearish. But again, it'll be a breakout and a retest. So there's very few of these that I see where there's a trade setup happening right now. Like they all look like they're going to happen later in the day or not at all. Today might even be a day where it doesn't happen. Look at the consolidation on the daily on Swissy Yen. This is madness. Like it's madness because it's been going for several weeks. It's been going since November, almost, yeah, several weeks. Not much happening there. So pass on Swissy Yen. Let's look at gold. Okay, gold dropping a little bit lower, breaking lower, and then not going anywhere. Immediately find support. So the lower gold goes right now, the more there are some kind of buyers stepping in. Gold is a hard pass for me right now. Silver looks more bearish. They do look bearish. Look at that. That's a bit of a breakout momentum candle. So this looks like it wants to head down towards 21.53. Gold may do that. So I would say trending lower, but with caution. Okay, but with some caution on that one. Just do this with some caution. I don't entirely trust it. Thanks. Thank you. I appreciate that, Sven. silver appears weak. Could well head lower with caution. Okay, it does look bearish. It does look weak. That's okay, baby. I don't know if the sound carries anyway. Okay, forget about these. Palladium, platinum, all very kind of heading lower, but are they, aren't they, will they, won't they? Okay, let's move on to crude oils. So crude oils did hit a little bit lower yesterday. There were some moves down. They could continue. I think we've got a bit of a swing high here. We could see them head a little bit lower. So crude oils possibly. Oh, that was the breakout. So this is, I drew this in yesterday. We were up here at a high. I was looking for a bearish close and we got it. There we go. And then it subsequently headed lower. Okay, so that was yesterday. I think price was up here. Drew an arrow in, and then it did actually head lower. So I don't know if anyone traded it. I did not trade it to the downside, but there we go. That was what we're looking for. And today would be a similar type of thing. I think it could be a breakout to the upside or the downside. So I'm not going to add it on the list, but that's what I'm looking for. The indices are consolidating. Now they are consolidating at the old highs, and honestly, yes, it's possible they could break lower. They did not. So that carries over from yesterday. They didn't break out. If they break out to the upside, that could be a very nice, potentially profitable trade. I'm going to extend this out and try to map that range a little bit better. Like that. That's your range. It's quite important to try to frame it as best you can. So that carries on. That's basically the same as yesterday. Let's look at the S&P. S&P's forming a bit of a base here. It's drifting lower. Drifting lower can be a trap. What I would be looking for, ladies and gents, would be candles closing near the lows. So here we've got these rejections underneath. It's closing and pushing up. That's more bullish than bearish. I would be looking for rejections along the highs and closing near the lows. So small candles, spinning tops, dojis closing near the lows. That would be an indication that it's more bearish than bullish. This does mean a breakout at some point, but it's leaning 55% to the upside, 45% to the downside. Okay, caution, caution, caution. The US news is potentially going to be the thing that triggers it, not because we don't know what the news is. We know the numbers could potentially be disappointing. We know that. So the market has already priced that in. I would say, yes, maybe the numbers come out and they're positive and everyone's, wow, surprised, but they're, and so maybe the market moves off that. You get a stronger dollar, everything else moves, but maybe it just seems like the market's just kind of waiting. Russell 2000, tight consolidation. These could be breakouts to the upside and they could be very profitable if that's the case. But caution, just because we have to wait till they break out. The FTSE, let's have a look at the DAX. The DAX, oh yeah, so yesterday I don't know if anyone took this, but I did trade that. I didn't take 3 to 1, I took 2 to 1. It was dropping down here and I just closed out the trade. And again, there was something else going on, so I traded that breakout down. Now it's in a consolidation. Here's the difference. See how these are closing near the lows, closing there, the price action a lot more bearish on that one. These aren't really doing that. So there's a difference. This one does not look as bearish. When candles are closing near the lows or near the highs, that's usually the direction in which they're looking to go. There's nothing here. This is just a mess. So it says to me to be cautious. And that's it. Guys and girls, that is it. Okay, so, and news at 1:30 UK time. I would say that would be it from me, guys and girls. So let's just zoom out. Let me clean this up a little bit. There we go. That's the list. I mean, again, exercise some caution, please. For the love of goodness, for me anyway. What I might just do is just wait for a few hours just to see if something starts moving, and then if it moves 15 minutes or 5 minutes. 15 minutes is really good because it's usually got relatively tight spreads and the price action is a little bit less volatile, and it's plenty of decent trading opportunities. To give you a sense of it, I mean, my stop losses can be anywhere from, I took a Euro GBP trade or something the other day, or it was a trade I took, I had a 7 pip stop loss, which was fantastic. So I hit my 1-to-1 in 7 pips, and I hit my 3-to-1 in like 21, 22 pips. So I'm looking for tights. I'm looking for stuff that's anywhere from, let's call it 6 pips, which is amazing, to 17, 20 pips at most on the 15-minute time frame, which means 20 pips is 1-to-1, 60 pips. So that's why the 15 minutes as opposed to the 1 hour, because I really want my stop loss. I want to make sure my 1-to-1 is really easy to get to. Cool. And that's it. So extra caution today. This is saved. It is in there. You should all have the link. I dropped it in the chat. It is there. You can access it. Let me know if you can't. And then I will maybe, I won't stream, but I'll, yeah, we will catch up. I'll do my Sunday video and then we'll pick up on Monday. So Monday morning, we'll do it, okay? And then we'll see what happens with it. So just be cautious today. Don't feel pressure to trade. Trade if you see something you really like. I'm not going to trade unless I see something I really like, okay? Cool. Today just feels a bit funny. Market's waiting. All right, guys, I'll let you go. Thank you very much. Have a good weekend, and we'll chat to you next week. Thanks again.